Welcome back. Now, yesterday we were talking to Cosmos Asset Management. They have launched a crypto mining ETF on the Chi-X with the Chief Executive Dan Annan telling AusBiz it was to give investors exposure to the trend without the risk of investing directly in coins.
I think those that want to gain exposure to Bitcoin but can't for their clients on a regulated platform, that gives them the chance.
Yeah, it follows moves in the US of Bitcoin's ETFs launching as well. So are they here to stay? For his thoughts is Ian Lowe from Dacxi, and he joins us now. Ian, great to have you on. Look, this is a great development, isn't it? That launch of the first ETF.
Yeah, look, there's certainly huge pent-up demand for this, and look, it's all started to unfold quite quickly. So we saw ProShare launch the first SEC-approved ETF earlier this month in the US. Now that particular ETF doesn't have direct exposure to Bitcoin. Its exposure is indirect in the form of futures contracts. And so what this means is that the price performance of that ETF has the potential to really differ from the price performance of Bitcoin itself in that particular case. Many see that as a problem, and many see it as an opportunity. But look, either way, the response was fabulous. It traded US $1 billion in its first day, which is the second highest in history. It already has that particular ETF, the ProShare ETF, has over $2 billion US under management already. And of course, ETFs really make it easier for institutional investors in particular to participate. ETFs are fully regulated, and they provide a method of participation beyond the crypto market itself. So look, where this is going is quite interesting. So even in the short period since then, in the US, SEC have approved further ETFs from Valkyrie and Vault Equity. The Valkyrie ETF is similar to the ProShare ETF, it's futures based. The Vault Equity ETF is a different approach. So they're actually taking positions in Bitcoin related businesses such as Coinbase and MicroStrategy. And there are approximately 40 other applications sitting in front of the SEC. It's going to be really interesting to see how they respond to those applications. The feeling is that they're unlikely to prioritize anytime soon or approve ETFs that have direct exposure to Bitcoin or crypto until the broader regulatory environment develops. But there is really strong interest in these ETFs, and that interest is also very strong in Australia.
Were you saying before that broader regulatory landscape develops where you get that direct investment? Interesting news today, the Australia's corporate watchdog saying that holders of underlying crypto asset investment products would need a license. I mean, clearly they're coming to the party now. They're obviously entertaining these ideas.
Oh, completely. And this sort of regulation is something the industry's been, screaming for a period of time. It legitimizes the industry in a way that I think is really important, particularly when you consider just the breadth of ownership in crypto and the growing utility in crypto. Regulatory frameworks are really important, and beyond that, they're actually urgent. And look, I think, locally ASIC are very, very aware of this. The question remains how quickly they can act. And so the industry is looking very closely to see not just what the outcomes are, but the speed of progress.
Yeah, is there anything specifically that you would like to see, Ian?
Well, look, one of the things that there's a number of sort of core proposals that industry's put forward. One of the things that we think is really important is that, aside from just regulating crypto more generally, is that custodial responsibilities are made an essential requirement on industry. So at the moment, consumers can trade on an exchange and hold crypto, but there are very, very few, even in the centralized exchange world, where they're upholding identity verification requirements. There's very little commitment to custodial capabilities. In other words, independent custodial oversight that advocates for the customer. We think that's enormously important. And industry's certainly made that clear, and I think the regulators will respond with something in that area.
Ian, just before you go, what are your thoughts on the movements in the broader crypto market this past week? Just taking a look at Bitcoin, it's currently sitting at about 61,500 US. A bit of a pullback over the past 24 to 48 hours, but looks as though the buyers have come back in again.
Yeah, that's right. Look, you know, the bumpy ride continues. I mean, we always say to our investors, do the work, take a medium to long-term view. You know, we certainly think that trying to buy at the bottom and sell at the top is best left to professional traders. But look, the price surge that we've seen in recent weeks has backed off a little bit. I think what that really does is probably create a new price floor. You know, we've seen this historically, that price surge and then it drops a little bit, essentially creates a new price floor. And if you look at all the market commentary, on balance, the view is that you know, the short-term future for the major coins is really good, and that we should continue to see good support for those majors, particularly Bitcoin. Ethereum's just gone through a major upgrade of its network, which is about transitioning from proof of work to proof of stake. These are really important technical developments that the market seems to be getting behind.
Ian, thanks very much for joining us from Dacxi.
Good to talk to you.